right, what's going on, everybody? We are back this week. I told you we would be, and here we are. I've got Andrew and Tillman with me, as always. Going to discuss some Bitcoin stuff, as always. Talk about the Bitcoin ETF flows, talk about SoFi Bank allowing crypto trading, something that we've been talking about for over a year now coming. Matter of fact, you know what? If you're new, welcome. We're glad to have you here. Pretty much everything that's happening, we've been talking about is going to happen over the last year and a half plus this show's been going. I'll admit it, and I think the guys would agree with me that a lot of this is happening a lot quicker than we expected, but nonetheless, it was the roadmap that was coming in. So how are y'all doing here, guys? Andrew, Tillman?
Hey, but good to be back. I had a great hunting trip with my oldest son, and we accomplished our mission. So meat is in the freezer, and Bitcoin, look at the price. It's awesome. It's on sale today. It's probably going to go on sale even more tomorrow.
Don't tell people that. They're going to hate you, man. They like you as it is. I mean, look, we got Tillman is his best version of an evil genius armchair, but he got it from Pottery Barn because it's classy. So yeah,
Restoration Hardware, buddy, not Pottery Barn.
Yeah, let's get it right. Let's get serious.
There's not one thing about the macro perspective that is bearish, in my opinion. And so what could you complain about? I mean, the adoption rate at an institutional level, at a retail level, I mean, everything is up and to the right, and it's exciting. Everybody gets bored with the price of Bitcoin because everybody wants to become rich overnight. But, if you look at the traditional ways to become rich in times past, they've always been around long-term compounding.
Yes.
You invest in your 401k, 20 years later, you're rich. Everybody has an accelerated timeline as it pertains to those expectations now. Everybody wants to invest and 1 year later, or even shorter than that, be rich. And that's just a pipe dream unless you're exceptionally lucky. Because even if Andrew's
I just want to say right quick here, man. I love that you said unless you're extremely lucky. As somebody who's been trading for 30 years now, I'm going to tell you that's legit right there, right? I mean, if you're going to be successful in a very shorter period of time, it really is much more that you're lucky than anything else. And I'm glad you said that.
Well, there's even a further analogy. I mean, I think everybody's heard, don't try to catch the falling knife. Well, in order to buy the bottom, you've got to catch the falling knife. So are you saying if I start tossing a butcher knife around and I try to grab it by the handle right as it's hitting the ground and I don't cut myself, is that lucky or is it skill? Well, do it 100 times and we'll figure it out. But I would argue that it's luck. And unless you become exceptional at juggling knives, it's always going to be luck. And it's the same thing with trading. It's exceptionally hard to pick bottoms, exceptionally hard. Like it's almost the hardest. And because that's where all the smart money's buying, and they don't want you to buy with them. They want you to sell to them. That's the whole point. They want your shares, or they want your Bitcoin in this instance.
So to Tillman's point, think about a fairly famous trade that hasn't gotten as much publicity on crypto Twitter as it should, but it's because the guy put everybody on crypto Twitter to shame, and that's Jim Chanos and his MicroStrategy trade. So his MicroStrategy trade, which everybody wanted to argue with him about, he was short MicroStrategy and he was long Bitcoin for the better part of about a year. And he was right, and he pulled it off, and he made a ton of money doing it. So the moral of the story there is, are you Jim Chanos or are you not? Well, none of us are Jim Chanos. Nobody is, right? We're talking about, if you have the emotional fortitude and the mental capacity to catch the proverbial falling knife, which turns into an outsized trade, then you're not doing it by yourself, in your office. You've got a set of offices with a bunch of traders underneath you, and you're running a hedge fund, And if you're really, really good, you run it for more than 3 to 5 years, because most of them go away during that time period. So
Yep.
the amount of people left in that group of people is like 15. And we could name 9 of them probably off the top of our head because they're famous, right?
Yeah.
So the ability to handle volatile assets and be able to make meaningful capital doing that time after time after time is a, it's the same. It's the equivalent of saying, hey, if all 3 of us trained pretty hard, we could all make it in the NFL at a position next year. Like, even the guy that played at Texas for a long time couldn't pull that off, because the guys there are at such an elite level that even the guys that are on the practice squad would make us look really stupid, right? Really stupid.
Yeah.
Same thing with trading, same thing in finance.
Yeah.
You can be outstanding, on a few trades, but if you think you're going to find yourself competing with Jim Chanos and him effectively setting up a straddle type of trade where he's long one position and short another that are fairly tied together, I just watched people argue with him and kind of laughed for a long time.
Yeah, but I watched a lot of his interviews, and I think I think some of the best investment strategies are really simple, right?
Yeah.
They seem complicated, but it's really simple. And he kept coming back to one thing. I think it's trading at too high of a multiple of MNAV.
Mm-hmm.
That's a really simple concept. It's like, hey, how much Bitcoin do they own? How much is that value? Oh, they're trading at 7x their Bitcoin holdings. It's probably going to come down a little bit. That sounds outrageous to me. It could have been that simple of an acorn that grew the oak tree, right? Why do I say that? Well, because in order for you to have exceptional conviction about something, it has to be that simple. Conviction comes with simplicities. Conviction comes with knowing what is right and doing what is right, regardless of what people say. And, that is how you get into a counter trade. That is how you get yourself into the opposite of the public, is by knowing something that you have exceptional conviction in, that you're willing to stick your neck out on the line for, because you've got conviction to that point. And most things that are very complex, even if you're intelligent and you deduce all of the risks on all the different variables that could impact outcome, even if you run all those scenarios, the more scenarios you run, the less conviction you have, period, the end. Because you're proving to yourself through that whole crap, a lot could go wrong here. You know what I mean? Whereas if you have a simple premise of they're trading at 7x MNAV, that's too high, short it. Oh, do I want to still own Bitcoin while I'm shorting this? Yes, I do. Why? Well, because Bitcoin's trading at a 1-to-1 MNAV. Those aren't competing trades, in my opinion, right? Those are actually complementary trades. But it has to be rooted in conviction, and it has to be rooted in some simple premise that you can truly own and defend, not only to the public, if you choose to do so, but to yourself. Because like you said, Andrew, like the whole ride up to stardom, you're questioning those things. Unless you have the conviction of the root asset that you own is something that you can't replace. There's nothing else that you would swap that money in and out for. Like, all the fundamentals are there to where you can bet on that with exceptional,
Well, and to prove how difficult it is, a name that everybody knows, Jim Cramer. Jim Cramer was a very, very successful hedge fund guy for the better part of almost 15 years. But then he stopped because it's really, really hard. And instead, he now does TV shows and has done TV shows for 20 years.
That's easier.
Yeah,
it's way easier.
Easier, right? Yeah. So it is a very, very difficult thing to be a market maven. And so, there are other ways of going about making a buck in the market that make more sense than thinking you found the winning trade and you're the only one that knows.
Man, that is such a great point, because I think, we can really drag that to what our audience, they're around social media all the time. The big social media influencers out there, right, who are talking, they got hundreds of thousands of followers. It's easier to be the character to do the show than it is to be a success, not just at trading yourself, but, oh my God, a hedge fund. where you got people calling you because, the market's going down and you're not getting out just yet. You got to deal with, even when you're right, you've got to deal with it. And that's a tough thing, right? And
look at somebody as famous and as good as Kathy Wood. Kathy has been exceptionally right on a lot of her calls. I mean, look at her Bitcoin call. She was one of the most early adopters and early investors. But
same with Tesla.
Yeah, same with Tesla. But even she, I think 3 years ago, had, I can't remember how much, $100 billion of capital calls. Like, people were pulling money out as fast as they could get the money out because she was wrong about something that made her kind of have egg on her face in that moment. And that's the life of living at the top of, living her. You can't help. The question will be, what does history write about her in the end? But if she had to wake up every day and, retire based upon the opinion of other people, including her own investors, she wouldn't be in business. Like, she's got conviction about her stance. She doesn't need anybody else to go, yeah, attaboy, you're on the right track. She knows whether she's on the right track based upon her own, track record and what she knows about the markets.
But for the individuals, invested with stuff like that have people that are managing their money in one way or another, it's always, what have you done for me lately? It's forget that you gave somebody, 100x or whatever, this one loss where they lost, 5%. Oh, nope, you're terrible. You're terrible. I'm taking all my money. But, and I don't think a lot of people get that, but I'm really glad that Andrew brought that up because it's such a great parallel with Jim Cramer, and again, with a lot of the influencer, you got James Wynn and all these other guys out here. I hate saying his name because it just,
Why are you even giving him press? That guy, oh my word.
Yeah. Well, it's just it's a very clear exhibit A is to at some point you're going to crash and burn. The guy's crashed and burned several times, but he's too stubborn to move on and either do it quietly or do something else. But if you've been around, certainly around crypto Twitter, the length of time I have, the amount of people that have come and gone is staggering, right?
Yeah.
Oh, yeah.
Staggering. I mean, one of these days I'm just put together a post of the faces and the avatars of people that used to be meaningful in the space and no longer exist. It is a long list.
Very long list.
Is BitBoy on the top of that list? Or
BitBoy is my favorite on that list.
I know that. That's what I brought him up. Well, I mean, which other one has live streamed his own arrest? That's kind of odd. I mean, that's amazing. That is cinematography genius or cinematic genius.
There's nothing has ever been better in the history of crypto Twitter than who's in the car? Who's in the car?
Who's in the car?
On the phone. All right, guys, it's Cassie in the car. All right, Cassie's in the car. It's Cassie. Cassie's in the car.
I gotta say, and one reason why I will probably never.
It was the greatest live stream ever in the history of live streams.
Probably the one reason why I'll never have any real significant following. I'm only at 40,000 here, but it's because I just can't do this, right? I see social media to me. Do you guys remember? Okay, so back in the day when there was actually cable television and there was like this VH1 channel, and the VH1 channel had these big people from the 80s or whatever, and what are they now? Or they bring them in these stupid shows. I swear to God, I feel like social media is that. It's like somebody might have had a high at some point, and then they just come in here and they just live stream their crash. And it's
What's genius about that is that was the high for BitBoy on social media, but was clearly a low in life. Right?
Yeah.
But that's what social media does, right? I mean,
the way you looked down at the camera and said, "All right, guys, Cassie to the car." It was just, I swear, I almost spewed my coffee out when I was watching that. That was amazing.
Well, and this is great because right before the show, I was actually doing a conversation back and forth with the friends of mine over there, Wyckoff Analytics. Mm-hmm. And we were, actually talking about the issues that new market participants have. And, and through all the conversation there, things come up like, people are, Hank was in there as well. And you mentioned that, he thinks a lot of people are coming in to trading into markets because they want the social media lifestyle, right? You talk about the big social media accounts and the lifestyle they show, right? It's all about showing the fancy cars that they're renting or the house that they rented for 2 hours to film their thing and to look like they own, right? And they do all this stuff. And people come into it for that, and Wyckoff Analytics brought up a great point that I often bring up, which is trading should be boring, right? If it's not boring and investing isn't boring, then something's wrong.
I would love to have an analytic that told me next to every influencer how much they made on social media as a percentage of their total net worth. Because if that's a high number, you can't trust what they're saying, in my opinion. Because if it hasn't translated for them in their own life into making a lot of money, how in the world is it going to translate to you, as advice? And so, I like to, the one thing that I think crypto Twitter does and has done exceptionally well is give you access to people who have been there and done that. You know what I mean? Like you get to listen to some really smart people on this platform.
And sometimes they'll even talk back to you. They'll respond to you.
And sometimes they'll even talk back to you. Exactly.
Do that 10 years ago.
Yeah. And so, if I am going to be taking the advice of somebody, I sure as heck am going to be taking the advice of people who may be more boring and smaller followings on Twitter, but they have been there and done that in the real world. And they're not relying on social media income to pay their bills. Because if you're relying on social media income to pay your bills, more likely than not, you're going to end up looking between your legs and going, all right, guys, it's Cassie in the car at some point.
That can be in my car. I'm just saying, man. So
got his hands up. By the way, another little hedge fund tidbit that most people don't know is that hedge funds, they'll completely stop trading at certain times of the year because they've hit certain metrics and they don't want to screw those metrics up.
Yeah.
Right.
Exactly.
When they're up 19% for the year, and the S&P's up 7.5 or 9.5. And again, I would encourage everybody to read Jim Cramer's book about him running a hedge fund. It's fascinating, both from a life standpoint and the ways that hedge funds work. It will teach you a lot about markets. Again, there's portions in there where they would get to a point, in October, and Jim would be like, "No more trading. Done. We've done 19.7% this year. So everybody come in, play ping pong, pool. You got to be here still, just in case something weird happens, something nuts happens. But we're not doing anything. We're not doing anything." And that's another lesson for people associated with trying to generate profits. And again, it harkens back to Chanos, because Chanos said in his description of the trade, he's like, there may be more downside to this, but I'm satisfied. I'm satisfied with where we are. We're out of the trade. We're pulling out. We're booking the profits. We're done. Good to go. There may be more downside, but I'm not going to stick around for it.
But see,
go ahead.
No, I was just going to say that's the thing, that if you actually figure out markets, if you actually figure out trading and investing so that you're in and you're profitable over years and years, that's the thing you find out, right? You go, okay, well, it's never been about buying the absolute lowest price and selling the absolute highest price. It's never been about riding 95% of the move. It's always just been about two things. You have two things if you're in the market, right? One, proper risk management every single time, every single trade, because the one time you don't is most likely going to be the one's going to wipe you out. The only other thing you have to do is to lock in profits consistently. Doesn't mean you're going to make profits every time, but consistently lock them in. Nowhere in there do we say you have to get the entire move or you have to buy the absolute lowest price. You have to sell the absolute highest price. Just means you have to find the opportunities, get in there, make the money, get out, and don't worry if it continues beyond the opportunity window that you originally started with. Because that time and compounding that we all talk about here all the time is what actually makes the difference.
Well, and readjust your expectations, because I think a lot of people get into a trade and they have targets that they think that the market knows about and that they're working towards. No one knows about those targets other than you. The numbers, the dollars behind them are all only significant to you. And the chance of them actually hitting those really has nothing to do with you. And so the way I look at, taking profits is, and this is just for kind of the beginners out there, different risk reward ratios should be applied for different strategies based upon a lot of different factors. But if you're just getting trading and you're thinking to yourself, like, when should I feel good about taking profits? Like, what's a good number for me? Because that's different for everybody. What I started doing when I was getting going was I would say, okay, how much do I need to make in a month to pay my bills? And this is if somebody's wanting to be a full-time trader. Okay, I need $5,000 a month, let's say. Well, if I'm planning on 20 days, trading 20 days a month, and then I say, okay, with 10 of those days, half of them I probably won't take trades, then, I need to make about $500 a trade for 10 trades to make my nut. That doesn't account for loser trades. That doesn't account, but that is a starting point where you start saying to yourself, you know what? If I'm up $700 on a trade, I've made more than a whole day of profit. I've done my job. It's like Jim Cramer when he said, come in and play ping pong. It's time to exit the trade, in my opinion. It's time to take your 750 and run, because it's proportionate to your lifestyle and proportionate to what you're trying to accomplish. You've done your job and you did it exceptionally well. You did it 50% above your target. That's a big move for you. And take it and run and try to do that 9 more times, and you'll be a pro trader. Literally, because a pro trader is just somebody who pays their bills every month trading. That's all it is. So if you're making 750 on 10 trades, you're at a 25. You've made a month and a half of revenue if your nut's $5K a month. Start breaking it down against what you need instead of these hypothetical targets where, I set my profit target at a 3-to-1 and it needs to hit $3,200 in profit for me to take this trade off the table. And then it gets to $2,200 in profit and you're conflicted.
Yeah.
When you should be just slamming the sell, but you know what I'm saying? Like, don't set realistic expectations for yourself, because it's going to be unlikely that it hits them, number one, and number two, you're going to put yourself through turmoil trying to get to them.
But that's the issue, right? I mean, that's the thing that new market participants struggle with day in and day out, right? Is actually not doing that thing where they're trying to have these really stupid, targets, and not stupid because they're stupid, just because it's ridiculous kind of targets, that they're doing there. Or, one thing I even do that I talk to our students a lot about is, even when I've got a target, I'll usually, or like if I'm making a target, I'll usually set it a little bit lower than what the target would be to get me out prior to it. Because here's the thing, a lot of times these targets are going to align with areas of which other people are looking, and it can get front run. I want to make sure I'm out. I don't want to sit here and make, $1,000 on a trade and not get out because it did make the last, $50 move higher to get me out to, hit the exact target. But, again, it just comes down to that whole idea of, listen, if you're getting in there, the goal isn't to get absolutely every penny on the floor. It's to say, listen, here's a good setup. Here's a decent target. Let's do that. And then don't worry what happens after. Find the next setup. But everybody's scared to find the next setup.
Do you want to be one of the people in the musical game of chairs when the music stops, where you and another person, everybody's seated and there's one chair left and it's you and the other person and you're fighting to get the chair? That's what it's like trying to play the blow off top. You literally are fighting after the last exit chair. Yeah. And anything after that chair is a loser trade, because you're selling into giant candles of red that aren't going to be filled easily. So, if you want to fight for that last chair every time and fight for that last penny on the table on the blow off top, just know you're going to get stuck without a chair sometimes. I'd rather just be the guy who finds the empty chair real easily and never has to fight for it. And I'm just in the game round after round after round after round, just sitting down and then going, man, this is boring. Nobody ever fights me for my chair. Why? Well, because I'm not trying to play. I'm taking at 70% of my profit target. I'm 50% out of the trade. You know what I'm saying? Like whatever's left on the table, I don't care about. And it sure as hell isn't going to determine whether the trade's profitable or not, you know?
Yeah, exactly. Hey guys, listen. So I saw that, well, again, first of all, Bitcoin ETF flows, what is it? 564, I believe is what it, or 524 yesterday. So coming in there pretty good. The biggest batch of that coming in from IBIT, FBTC coming in at 165.9. We had ARC coming in at 102.5, and BitB there coming in about 7.3.
We're probably going to see the last vestiges of meaningful inflows. Let's call it over the next week. 10 days from now, we're knocking on the door of Thanksgiving, right? So get through the 22nd, 23rd, and then the following few days, it's Thanksgiving time. So that's when things really start to slow down on the world of Wall Street. Which we talk about Wall Street, but all Wall Street is basically a collection of Main Street, right? And so all those flows are coming from a collection of folks that want to purchase a small amount of FBTC or IBIT. They want to allocate additionally or re-up or whatever it happens to be to have access to Bitcoin as an asset. My guess is that there's more. We're about to see additional crypto ETFs approved. That's taken longer than people would have thought that it should, but it's going to happen. Solana has come on board over the last couple months. It's seen meaningful inflows. It's going to be something to watch in 2026. Do people continue to allocate and increase allocation, or do people get satisfied with the asset class itself and just settle in? Do inflows slow down? In other words, 2024 happened, and there are a lot of inflows, right? But the inflows actually increased in 2025. Does that happen again in 2026, or does it slow down a little bit? That'll be something to watch in terms of, that would be a meaningful data point in terms of sentiment, right?
So you're saying don't exit when the Fartcoin ETF comes out?
Actually,
I actually have been blown away with something that I forgot that we should talk about that I'm going to bring up now. And I don't know if you guys are as blown away as I am, but you know how we've really touched on the exchanges, specifically Coinbase, and just how big they are and 100+ million, largest financial institution on the earth from a user's perspective and all these things. Well, they launched something that they've been hyping up called Coinbase One. Have you guys been following that?
They've had that out there for a couple of years, actually.
Well, they did, but they've been hyping it based upon this week of Coinbase One member exclusive offers. Have you guys seen all this?
No, I've not seen those. No.
So it started with, first of all, the thing that caught my attention that just makes they reek of a bank now is if you hold USDC, you're getting 4.25, or I think 4.5, maybe. That's insanely good. So you go, okay, are they competing with banks? No, they're killing banks. Okay. So now you go, okay, well, are they competing with the likes of the JP Morgans or the Goldmans? Well, let me read you a new thing that just opened up today. The third day of Christmas, if you will, for Coinbase One members. Up to 5 times more Monad tokens. They're launching an ICO through Coinbase One. And it's like a live pre-sale where you can request up from $100 worth of USDC to 500,000 of pre-sale access to this that's exclusively given to Coinbase One members. Now, I want you to think about how close this looks like to an IPO.
Yeah.
This is an ICO, man. This is access. All I got to do is, and by the way, they're incentivizing you. They're incentivizing you to participate in the fact you can get 5 times more tokens than you can through the Coinbase one than you can anywhere else. So the allocation's bigger, the access is pre-sale versus post-public sale.
Yeah.
It's insanely close to what you would have expected a Goldman to do 5 years ago, 2 years ago, 1 year ago for an IPO. And now we're seeing an ICO do it through Coinbase's platform. And at the same time, they're offering you a 3% bonus on all crypto you add to the platform, including USDC. So they're going to give you a 3% bonus for putting money on the platform, and then you can access a ICO and spend that money getting benefit that you can't otherwise get. I mean, this is a one-stop shop, guys. This is a bank.
Yeah. So I saw this, and it connects the dots now for me. So Brian Armstrong yesterday morning put out a post that said token sales are so back. Launching tokens has always been. Now this is the CEO of Coinbase, obviously. So
dude, he's launching an ICO now.
That's right. And then he posted the blog post that they did on that. So token sales. So yeah, I mean it's.
Well, let me tell you, it's gotten my greed bone working.
Yeah,
I'm serious. You dreamed of the day, and you know why it has. You guys were both in the cycle in 2017.
17. The ICOs.
ICOs was that 17?
17.
Okay.
Yeah, 17.
Okay. You remember all the ICO crazes?
Yep.
Yeah.
What was the one way you were guaranteed to make a buttload of money? Before it got listed, buy it before it got listed on Coinbase. If you bought it before it got listed on Coinbase, it was minting money, man. It was like just mint it. Well, Coinbase is now organizing the effort and giving me a ticket of pre-access. I mean, yes, please, and give me a double dose. Actually, give me 5 times dose. And I'm gonna play the game, even if I lose money on this one. I don't care. I'm getting access to something that I know other people are going to go, oh, Coinbase sponsored this. Coinbase is literally pushing this product.
Well, now you know why. Again, now you know why JP Morgan is coming to Coinbase and saying, let's do this and let's do that. Why? Because Coinbase has, they have a huge base to be able to do this off of, right? So if you've got 125 million customers and you want to try something, you try it and it works with 5 million people. Okay, let's now do it with 50 million people. So having such a huge, broad base of customers to be able to launch all different versions of things, you now are competing for all intents and purposes above and beyond a Goldman Sachs or a Morgan Stanley, right?
Correct.
They're absolutely moving beyond that. They're thinking,
well, I can take risk-free positions in USDC or, risk-free and get 4 1/4.
Yeah.
Or I can press the pace. They offer loan products now where I can lend USDC and instantly get access to 8 1/4% or 8% interest. And I can instantly remove that liquidity anytime I want. And now they're offering me ICO access. Yes. Yeah. Keep it coming, love. I mean, this is leaps and bounds ahead of everybody else.
For Morgan Stanley and Goldman Sachs, that is, put your pinky up while you have the conversation, and that's securities-based lending, right? Yeah. So Coinbase is offering that in the same way, probably in a way that's maybe a little more tightened up because it's USDC, so it's pegged to yada, 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 whereas securities-based lending is a different beast altogether, right? If you're taking out a securities-based loan associated with NVIDIA, Facebook, and something else, well, there's going to be some movement in the back end of that particular agreement. Whereas on USDC, not so much. So what Coinbase is doing, it knows that there's 30% of their customers have made a lot of money over the last 5 years. So they're keeping them away from Goldman Sachs and JP Morgan's private bank division. They're keeping them from going there, and
they're serving the market. They're literally responding to demand. And it's beautiful that we have a sandbox that we can play in now that's being regulated. But Coinbase, to me, with what they're doing, and there's 2 more announcements on the member week whatever it is. If they're anything like this, I'm afraid to see what's next. I mean, this is groundbreaking stuff. This is stuff that I've been waiting for since 2017's ICO craze. Like, the ICO craze was fun. It was a blast. You were chasing the next hype coin left and right. And it literally was a game of like deep dive research in forums to be like, which one's getting listed on Coinbase next? I'm serious.
But like you said, it's a big thing, but nothing we haven't discussed, right? I think Andrew originally started talking about it, almost back when we first started the podcast, about this is the way that things were going, where we were going to see these big crypto platforms, especially when we start looking in, you're seeing, again, 120 million users or whatever versus like Bank of America or Wells Fargo or something like that.
Bank of America only has 60 million users.
Exactly.
They're half the size of Coinbase, right?
And look how long they've been around.
Name the next biggest bank in the United States. Wells Fargo, they have like 40 million, right?
Exactly.
So they can't move the needle the way that Coinbase can. And here's another little thing to think of, right? So Coinbase, when they went public, how did they go public? Did they have a bunch of investment banks running the show for them? No, they didn't. They did a direct listing.
Yeah.
Right? They did a direct listing, so they ran the show. So it is, they have been very purposeful in being very, very careful in tying themselves to any of the big institutions. How much money those institutions may or may not be, tied in terms of equity, I don't know. But I do know that they are very intentionally competing in the, let's call it 25 to 45-year-old space. They want to keep 25 and 45-year-olds that have, $32 million on their platform or $7 million on their platform from moving that money to Morgan Stanley, JP Morgan, or Goldman Sachs. They don't want it to go away. So this is why they're doing all this stuff. They offer all this stuff to be able to offer and then some versus who they see as their competition right now.
Well, and listen, I don't know one thing about that crypto that they're launching. Not one thing. I don't know what it's built on. I don't know I know it's a layer 1 because that was in the brief description. It could be a total loser. I'm not vouching for the offering. What I'm excited about and what I'm getting stoked about is the integration and the fact that the platforms themselves, if you just look at this and fast forward 2 years, this will be, on every platform, and you will have exclusive offerings being taken directly to the public without a phone call from the private wealth division of that company clearing you. You're going to get access. Let me give you a point. Here's a precedence that's being set right now that is huge. What is the smallest amount of denomination that Coinbase is allowing me to participate in this?
Don't know.
$100.
Oh man. Wow.
$100.
Ice cream money.
Well, my point is what other IPO is letting you buy $100 worth?
Get into it. Yeah, exactly.
You know what I mean? This is lowering down. This is like getting to invest into a commercial real estate project and putting $100 to work into it. And this is unprecedented access. And I'm not saying that this offering is gold, but I'm saying giving the process and giving access to the layman, IPOs and ICOs at $100 incremental value per unit is a massive deal. And it's not something that should be ignored because it is going to be precedence going forward. And the more, I see Daniel said, a lot of these things are going to be losers. And a lot of these things are going to lose money.
Yeah.
It's not the point. I lost money. I bought a computer, a laptop when I went to Texas in 1999, and I think it cost me $5,000. And I never did $5,000 of value on it. I can assure you.
Oh,
I
man.
wanted the bleeding technology, and I was, by God, the only guy walking around Texas with a laptop in my backpack, and I was playing computer games in class. But my point is to be on the bleeding edge of technology and to be on the bleeding edge is risky, and there will be a lot of users. But my point in the access is, so what? Let's say you're as retail as it gets, and you don't have a lot of money to invest. Buy $100 worth. Go mow somebody's yard and put $100 into it. At least you got to participate. What if it is 1,000x? Like,
Yeah.
that's a lot of money. That could be 100 grand. I mean, you
Well,
could make a
and
lot of
here's
money. Is the
part of
point?
it. You don't have to be an accredited investor, right? The accredited investor nonsense, which keeps the normal
Bingo.
people out of it, out of the really, I mean, there's going to be losers. It's life, right? There's losers and winners, in things that are developed. But my God, you're like telling the average person out there, listen, and not only you tell them they can, you're suggesting they should go buy lottery tickets. No, come on, go buy lottery tickets, right? But you don't give them the opportunity to invest in companies that may actually really create some value, right? And I think at least with this, again, if you're a retail investor, you have to do your homework. You can't just go in and expect it's all going to go up. Everything's going to go up. If you do that, that's on you, right? I mean, it's absolutely on you. But if you're taking the time to do your homework, and now you have an opportunity to get in like basement level, ground floor of an opportunity, right? That you wouldn't normally.
Well, and the company that's offering you the opportunity is not some fly-by-night in, DAX out in the middle of the ocean somewhere. It's a Fortune 500, S&P 500 traded company. You're talking about the precedence that's being set here is by the best person that could set the precedence, Brian Armstrong.
So here's another meaningful difference in why this matters. So Robinhood has done something kind of like this, where they've got a secondary offering or an offering of some sort, right? And you say, I want some shares. Like 90% of people get one share. They want to buy 400 or 300 or 1,000. They get allocated one share. Whereas with this Coinbase offering, you buy as much as you want.
Well, it's not as much as you want, but it's still a heck of a lot. 500K. That's a wide range for retail.
Again, the way IPOs work on Wall Street is, when JP Morgan and Morgan Stanley and Goldman Sachs were working the Gemini stock offering, the reason why they're running that offering is because, hey, we have a built-in customer base that they're going to buy all these shares right out of the gate, right? So you're going to see a pop in the stock because they're going to buy the shares, and we're going to tell them, hey, don't sell your shares. We're giving them to you. Hold on to them. It's kind of a favor. We're going to get you an allocation.
Or we're going to give you 3% cash back on holding the shares, which is literally what Coinbase is doing. Right. So you put $500,000 to work in there. I mean, you're getting 15K for free.
But the only way that you are part of that club at Morgan Stanley, Goldman Sachs, or JP Morgan is if you've got darn near every dollar you have to your name with that bank. And you can prove it. And then on top of that, you've got half of your account is also securitized by securities back. In other words,
you've got to be the people
they've ever seen, right?
Well, you've got to be the people that get the Daytona from the dealer call.
Right. Exactly.
Yeah,
so
which is like nobody.
Yeah, which is a tiny, tiny group that get IPO shares. So Robinhood has done a better job of democratizing it further, except now you get one share instead of however much you want. Coinbase taking it a step further. Buy nearly, buy $100 or $500K, up to you.
Yeah.
So that's a meaningful lurch forward in capital markets.
Yeah. Well, what happens if what if the next company that wants to IPO says there's a more profitable path to an ICO than an IPO? It actually could bring. Do you remember when we all thought ICOs were dead, and
Yeah.
and it was like the death nail of any project to go, yeah, I'm launching a coin. You'd go, oh yeah,
Yeah. Yeah.
yeah. So you either are a crook and you're going to jail. You know what I'm saying? Like it was a horrible thing to say as a business because most of it reeked of vaporware with huge values attached to vaporware. Now you essentially, I'm not saying this, I am saying this. If I hear Coinbase is sponsoring it, I don't need to do near the due diligence. Like they don't want stuff to blow up on their platform. If all their high net worth individuals put 500K into this thing and it sucks, probably not good for them. I think they have some risk from a brand perspective attached to these offerings. And so you start going, you know what? If a company is, like Andrew said, looking to go to market to raise money, maybe Coinbase, after a few of these, changes the reputation of an ICO so much so that it becomes the preferred way to raise capital on through a public offering.
It's crazy to think about, man. Having lived through 2017 and the ICO nonsense back then, it's just, I mean, you can see it's where it's going, but man, it's just weird thinking about it.
The reason why it's crazy to us because we lived through 2017.
Yeah.
That world's gone. What world do we live in now? We live in a world where every time Larry Fink is on CNBC, he's talking about tokenization of everything, right? So what's an IPO now? If it's tokenized, it's an ICO, sure.
It's an ICO,
but it's a token version of an IPO, right? So that's just following the commentary associated with the behemoths.
Well, this road leads to the death of the IPO.
Yeah, I mean, it's
But think about it. Why would you? It's an inferior product. It's an inferior offering. It's less liquid, less mobile, less universally tradable. Like all of the deficiencies of pieces of paper compared to crypto are now going to be highlighted in shares versus tokens.
So it's continuing evolution. So we've gone to a world where IPOs, more times than not, if they don't need the help, by the way, if they're so in demand, they just do a direct listing. They don't deal with the banks. They don't deal with all the backroom type of stuff. They just do a direct listing and let the markets overall uptake their shares. So we've gone from every IPO is done by a bank to over a 20-year period, it started to turn into a direct listing. And now we could find ourselves in a place where when a company goes public, it goes public as the tokenized version of itself. We've had additional movements in the sort of security space, like the disconnecting of Google shares A and Google shares B. Some are voting, some are not voting. Same thing with Berkshire A and B. You don't notice it because you're not looking closely at it. You're not immersed in it. But there's been some changes and some evolution and changes across how public securities are dealt with and traded and how they work. This would be another meaningful shift to the tokenized world.
Yeah, and so we're sitting here talking about basically, these big companies, Coinbase, Robinhood, these big players in the crypto space, taking on basically, bank stuff, right? Well, now we hear what SoFi Bank, right?
SoFi, yeah.
Yeah, becomes the first and only nationally chartered bank to launch crypto trading for consumers. So now we've got banks, and this is something, again, we've been talking about likely coming here. SoFi Bank becomes the first one here. How do you think that competes, I guess, with what Coinbase and Robinhood are doing there? Because, coming from the other side, trying to get into crypto versus being in crypto and trying to get into banking.
I think it's going to be based upon the depth of liquidity that the market can provide its customers. That's what everybody wants, is just the assurance that when they press sell, that there's liquidity there to sell, and and I think that's paramount as it pertains to the larger pockets of money that we are trying to attract into these markets. I do think that a bank has a unique opportunity that a central exchange like Coinbase doesn't have, which is yield products through DeFi. I don't think that Coinbase will be as incentivized to push DeFi yield products because it's taking money off their platform, and DeFi is not something that it's the opposition to central exchange custody. DeFi is really for the people who want to self-custody, right? Or want to, and so if the banks are smart, they'll position themselves with yield products through DeFi opportunities that allow them to advertise a rate that Coinbase won't advertise. What do I mean by that? Well, Coinbase has given us 4.25% on USDC. A bank could get way more than that and not take a portion of it to incentivize deposits. They hold the money, they vest it with the DeFi protocol. You're getting the yield on it, and you're getting to trust the bank to do all that for you. That would be a really appealing thing. I think that would offer to customers what they really want. If you ask me what's wrong with my local bank, I love all the employees in there. I bank locally. I love being able to walk in and know who the president of the bank is. I like all of those things. You know, the thing I hate about them the most is the same thing I hate about all of them. They don't pay me to hold all my money. So I don't like to give them a lot. You know what I mean? So if they can solve that problem, I probably would let them hold more of it. You know what I mean? And I think through DeFi, banks could solve that problem and therefore be a much more attractive place to park large amounts of money versus kind of being looked at as like, your emergency fund or your operating capital is I guess the best way to put it.
So in terms of the pace and speed at which we'll continue to see the evolution in the cross section of banking and crypto, another little piece of information. SoFi didn't get their bank charter until 2022. That was 3 years ago, right?
They slipped one past the goalie during COVID. There was nobody in that office. They were just like, approve.
So 2022, it's, that's 3 years ago. So 3 years ago, they're now able to do things as a bank. And so that quick, as soon as there's a shift from a regulatory standpoint, they're now, going to do things on the crypto side. So how quickly do you think, exchanges that want to be banks will, once they get a charter, how quickly will they move on everything they can possibly move? Like lightning, like absolutely lightning. So the cross section is, to me, in 2026, it's going to radically accelerate. It's just going to. And this is just the first little, green shoots, so to speak, which Chris and Tillman know is like a TradFi term, green shoots. So these are the green shoots of the crypto and banking becoming almost one and the same. And whether it's a good thing or not is a different conversation, right? So do I want from a political standpoint, the government, banking, and everything to have their hands all over the idea of crypto and its ethos and all those things? I don't know. I mean, once the government gets involved in something, it often doesn't get better. But it is reality. Banking and crypto is and will continue to be an ongoing reality. And so
you got to give Brian Armstrong some credit. I mean, he's got some balls. There's no reason for him to do this. This is really like as bleeding edge. This is revisiting a lot of bodies that are in the wake. I mean, if you go talk about all the bodies that are in the water as a byproduct of the ICO craze of 2017, you're talking about just probably hundreds of billions of dollars that were lost in those things.
Here's a great example. So Coinbase just announced several tokens that they're delisting. Okay. Yeah. Anybody know where I'm going with this? So one of the tokens that caught my attention that they're delisting is EOS because it's now under $500 million. That was the biggest.
Was that the biggest ICO?
They raised $4 billion.
Jeez.
And now their token's worth under 500 million. So they're being delisted by Coinbase. So, full circle.
Yeah, full circle.
Man, I remember when EOS launched there, and it was everybody talking about it, and just crazy how high that valuation went. And
I do really appreciate the fact that we have a Unabomber conspiracy theorist on our chat, Fibo. I really enjoy his commentary. Armstrong is a puppet like the rest of them. I want to know who the rest of them.
You saw
I want to know
Gary's
who
watch
the rest
too,
of them
right?
are. I really do. I want to know all the rest of them. Share that.
You saw Gary in there too, right?
Huh?
Yeah.
You guys know Gary. You saw him in there too, right?
Yep. Yeah. It's again. I disagree with Brian about a lot of stuff, but there is no reason why he has to do this there, and it is risky. And I think you applaud people that don't have to take risk that do, because those are typically the innovators of our day and age. And so, I can appreciate him for doing this, and I also can see that it could, open up a big can of worms, and I love, it could have unintended consequences, just like anything. But I will be watching for one thing to confirm my thesis about this. I believe we will see in the next 12 months a company that is not crypto related launch an ICO.
Yeah.
Think about that.
Yep.
I'm opening up a cattle farm and I'm going to launch a cattle coin. And I think that's going to happen in the next 12 months.
Cattle coin, huh?
The price of beef has doubled. I know a guy.
Hey, Fibble, you used to trade cattle futures. There you go, man. You can buy cattle coin now.
Again, to Brian Armstrong, you have to be wired a certain way to build a company from nothing to taking it public, to it being 20 billion and then 30 billion and then going all the way back to 10 billion. And now it's at 82 billion. And at one point over the last few months, it was $100 billion company. Like you got to be good at something. You got to be good at something to do that. So yeah, I watch them closely. It is going to be unique and interesting to see how, how many crypto exchanges that we have. We probably have 100 crypto exchanges that somehow have the word buy or bit in them somewhere, right? So, what does that look like 5 years from now? Do we have, 15 crypto exchanges left and only 4 of them are really all that meaningful? Probably. That's where
I think the integration that we're seeing take place right now, the green shoots that we see are an example of the merger of these markets. I don't think the customer will see the difference at the end of the day. I think it will be all in one, and everything will be tokenized, whether you know it or not, and you'll just be living a much more efficient financial life than you did in the past in terms of settlement times.
Well, it's crazy. I get so many emails, it seems like lately, and messages from all these exchanges. We're the largest exchange. We've been around since 2012. And I'm like, who the hell are you? And I know a lot of them, but I'm just like, I'm getting like this continual like inflow lately, trying to get me to, to do things with them and whatnot. But I'm like, who the hell are you?
Even company, listen, we've started at Arch Public talking to OKX a lot, and we're real impressed with those guys, and we're going to be integrating with them very quickly here, and doing some marketing efforts with them regarding Arch Public software. OKX is huge, and I have never been a customer, and so there are these pockets. Like, how many customers does OKX have? 100 million plus? Some insane amount of customers. And you're just going, how does a company get that large without me knowing about it? I think you can find that across a lot of. Uphold is one of those. You ever seen how big Uphold is? Compare it to another legacy industry, broker, and they're massive. Yeah,
I think Uphold was what BAT was going through when they had their when they were doing their little coin with the BAT browser and everything. I think Uphold was the company that they were utilizing back then as well.
Well, they're the only ones that that didn't delist XRP when the lawsuit was taking place too. So if you were an XRP holder during that time, you had one choice. But again, that speaks to the power of the ICO and the access and the off ramp that provides to the customer, and how sticky that can be. It can be a make or break for your entire company. It can be the very thing that you build your customer base on, like Uphold. I'd venture to guess that if without the XRP community, Uphold would not be what they are today.
Of course they wouldn't be. They may not be still in business. if it wasn't for the XRP community. Okay, Daniel Abraham, I'm a Bitcoin guy. Let's hear your thoughts. Isn't Stretch a risk-free tax return plus tax deferred? No, is the answer. Nothing is ever risk-free.
In case you didn't hear that, no.
That was a simple answer. If you want us to talk about MicroStrategy's offerings associated with their preferreds, they're just preferred securities. That's what they are. They've been around for 100 years on Wall Street. They're a mix of, are you a bond or are you a security? Will it be a little bit of movement from the quote unquote IPO price from 25 to 28 every once in a while? Sure. And they're going to pay a meaningful interest rate. That interest rate is only as good as the underlying company, pure and simple. So sure, go for it. If the interest looks juicy, but if you're asking me that question, you kind of already know the answer. Don't put 100% of your money into MicroStrategy preferred securities. You want to be diversified across all sorts of stuff.
Well, and go back to the thing at the very beginning when I said things that are typically really good investments are simple. Mm-hmm. Is Bitcoin guaranteed to deliver you a 10% a year annual return?
I mean,
it's that simple. If you believe that it is, then that's a bet that you might take. But I've been in Bitcoin long enough to know that there are some losing years. And so the question becomes, what happens in those losing years? And what happens if you have 3 losing years in a row? What happens when the upside can't be paid for, and they lose all their incentive to offer guaranteed returns? The whole ship can come apart really, really quickly. And because that product, in my opinion, is the least risky of the products that he offers, you're going to be the first person to get screwed, right? Because the least risky people are typically the ones that are long term. The riskier the asset is, the more violent those volatility swings of the capital in those assets are, which means the problem hits there first. All the solution functionality and horsepower goes to solving these problems, and what gets left, holding the bag, the more prudent entries. So I look at any of the products that Michael Saylor delivers as being functionally off the back of the gains that Bitcoin can provide. And so,
Daniel, I know what STRC is. I know what it is. It's not hard to find information on it across crypto Twitter. It's very, very simple. It's another preferred security associated with MicroStrategy and Michael Saylor. The reason why he's able to do these transactions and offer these types of returns is because of his underlying Bitcoin position. That's true. The other reason he's able to do these transactions in the scale that he's doing is because banks are getting paid enormous amount of money to help him do these transactions. And so, you're buying a banking product that has the back end collateral Bitcoin, yes, but it's also a banking product, preferred security that you're getting paid interest on. So see it as such, make it, whatever part of your portfolio you want to make it. But it's a banking product, and you have access to the ecosystem of MicroStrategy.
Well, just go research a dividend death spiral, and then tell me if it's risk-free.
I mean, again, 8x collateral for the security provide you with safety. At any point, that 8x could change into some other x, right? Yeah. That's it. You can convince yourself that it's quote unquote risk-free because of the 8x. But there's no reason why 8x can't turn into 4x or 10x or 3x or 12x over the next 6, 12, 36 months.
Exactly. It's not guaranteed to be 8x.
No.
Well, it's not guaranteed, and it has no direct claim on Bitcoin assets. It's not like you have collateral in Bitcoin. Right. You have no collateral. It's pieces of paper that you're hoping. Yeah, that's right.
It's a banking product that pays you interest for holding a preferred security. I could
even treasury bills have risk.
I could say more about preferred securities. Go look around Wall Street. Who else is doing lots of preferred securities? Not a whole lot of folks.
Yeah.
Folks. It's not a very popular transaction, but it's working for them and what they're doing. So yeah.
Well, I think this is one of the benefits of, this show in particular with you guys in here, especially Andrew, who has that life in TradFi prior to doing this and doing what he's doing here. Because most people, you think about it, most people that are talking online about things like what Microsoft are doing are crypto native, right? They're people who came in with crypto and then they see this versus somebody like Andrew, who was a TradFi native coming into crypto. And so he's got a different overall view. He says, listen, here's the reality of what this is. This isn't, hey, I'm in crypto and now I'm hearing about this type of, thing. It's like, listen, I've been looking at these things, talking about these things for, a long time.
It's just context, right? So in the same way that preferred securities are not very popular on Wall Street, neither are reverse IPO transactions that all the Bitcoin treasury companies did. Those pipes and RTOs are borderline the bottom of the barrel types of transactions that are being done at secondary, second and third and fourth rate type of let's call it investment banks. And I've seen it all. Places like Dinosaur Capital. That's a real place, by the way.
Yeah.
They're in the business of doing transactions, and whether or not they believe in those transactions is completely irrelevant. They're in the business of doing transactions. So if you're going to do an RTO or a pipe and take over a zombie company and it turns into whatever, you might want to be aware that that's not the kind of transaction that Goldman and JP Morgan are jumping all over each other to do. There's a reason why. So you got to tread lightly,
Yeah. Just be realistic about what's going on. Like right here, the risk Bitcoin falls below 50,000, not happening. Now, we don't believe there's a big chance it's going to drop below 50, but none of us up here would ever say there's no chance it won't. Right. And it's usually those things that type of thinking when you're in markets where you believe something is you believe so much in that there's just no way that could happen. It's usually a time where you need to make sure that you're protecting yourself, because at that point you're wholly emotional and not really being, neutral about what you're looking at. And that's all. And it's not saying you can't make money with it or whatever. We're just bringing out the realities of these particular types of products and, just markets in general.
Well, and I do stupid stuff just to, help me deduce information. I would try to equate it to a bond rating. You can buy junk bonds. You can buy, whatever you want. There's a risk tolerance for everybody. Try to appropriate a rating to MicroStrategies or any of these products that are Bitcoin related. Try to appropriate a strategy. I see, Daniel said the risk is Bitcoin falls below 50,000. I would agree with you. But Bitcoin falling to 50,000, what if it happens in a one-day candle and it's just a flash crash and all of a sudden, what happens in those events? What takes place in these stress test moments? Because guess what? A lot of altcoins 2 weeks ago did fall 50%. They saw them fall 90%.
We'll never fall that much.
Yeah, so you can never fall that much anyway. Bitcoin could absolutely fall 50%. Now, do I think it would stay down there for very long? No, I don't. But there's an event where enough people panic and you start triggering these liquidity events and these margin calls. God only knows. I don't know. But I wouldn't be, again, betting my house on it. And I sure as heck wouldn't be thinking that, I have something that should be a mainstay. Anything that looks like a guaranteed amount of a guaranteed check is not. Now, if I'm getting a dividend from an A-rated company and I have all the upside in the world attached to that investment and I am satisfied with that dividend, yeah, I'm gonna load the boat because so the question becomes, is it A-rated? How likely is it that dividend stops? Because guess what? There could be a death spiral in interest rates. And bottom line is they could be forced to sell Bitcoin holdings to keep paying you. That is a real future. That is an example of how the thing starts unwinding. And the longer they would have to do that, they would be faced with the decision of, do we skip payments, lower payments? How do we keep people's money in this? And, when you start having confidence shaking events, the risk profile goes way up or way down in terms of rating.
We are way over time, by the way.
Yeah, we got to get out of here. But as always, gentlemen, man, I just, love having you guys here. We were talking about before the show. This is my favorite time of the week. Getting here, chat with you guys, and letting everybody else think, letting in on our conversations and our thoughts. That all said is what it is. We're all still pretty overall bullish on Bitcoin. We tend to think in beyond, day-to-day price action and further on, and a lot of good developments going on there. So we do this every Wednesday, 11 a.m. Central, 12 p.m. Eastern, same places here, depending where you're catching it, on X, on Facebook, on YouTube, on Twitch. So appreciate you all joining in as always. And I'm going to say it just because Tillman loves to hear it. He's become a convert.
My gosh. We had such a good conversation. I forgot you were even going to.
How much you lose. That's it. All right, guys. Hey, listen, I appreciate you guys showing up as always. We'll see y'all next week. Everybody else as well. Until then, just, don't let your emotions get in the way of your trading and your investing out there. All right. Take care, everybody.
See you guys.
Trading tip: always manage risk before chasing gains.